Welcome to the video, guys. In this video, I'm going to be breaking down the Elliott wave theory and how I implement it into my trading. I'm also going to be going through a trade that we took yesterday in the Discord where we was able to net 25 pips on EJ. If you are new to the channel, welcome. I'm Crew Traders. I've been trading for around 4 years now, and I'm finally at the point to start my YouTube journey and use my experience and education to help you guys. So let's not waste any time, let's get on the charts. So let's just go through EJ first and I'll explain why I kind of took this trade, what I was looking at. Very simple terms, man. Like, I'm not gonna like overcomplicate anything and, you know, surprise you guys with anything. Of course, further on in the lesson, we're going to be talking about Elliott waves, so that stuff might be a bit more complicated, but I'll keep all that very simple. So what we want to do is have a look at the simple price action. We want to look where the market is, what the market wants to do, and all this type of good stuff. Okay, so I can't remember where I actually took the trade. I'll have to find it. It might have been here. I think it was here. Yeah, I think it was here. So it was around here. And basically, all I want you to do right now, looking at your screen, looking at my screen, is what is the structure doing? Okay, so the market overall has had this huge downtrend. Okay, and now we're looking to have this uptrend, right? So we're kind of creating these higher lows, higher highs, all that type of stuff. And the market kind of had this downtrend here where it's like a bit too aggressive for us, and usually price will come back in and fill some of these orders, and you know, the market will kind of have that move back up into that zone. So all I want to do is break down the chart in regards to uptrends versus downtrends. Nothing overcomplicated. I'm not going to use any difficult terminology. So of course, green is going to be uptrend and red is going to be downtrend. So I'm going to highlight the green zone as the uptrend, and then the red zone, like there, is the downtrend. So as you can see, I'm just going to be going through my chart, and this is what you need to do visually. Okay, you need to start looking at this visually. You need to start looking at it fractally. If you don't know what fractally means, well, I don't think fractally is a word. I mean fractal, if that makes sense. I want you to be looking at this in regards to fractal, and what that basically means is when we have multiple time frames kind of blending in. So if we go onto a higher time frame, we'll be able to see this just with smaller candlesticks, but we get an idea. Okay, so as you can see, what I'm doing now is I'm just drawing these zones where the market's had retracements from a previous high and it's developed a higher low and all this type of stuff. And as you can see around here, we'll get rid of this one actually, draw it back a bit, go there, and we'll go kind of there, if it lets me. And then on the last one, we're going to go to this pivot point. So now we're kind of in this, again, this frame of mind. Ignore this wick because it's just a wick. So now we're kind of in this bias of, you can see the moves up are very, very strong and the moves down are just a retracement. It's just a reset on the chart. Okay. So we're resetting, and we're having this impulsive move. So now we're in this zone, okay? We was in this zone for a long period on yesterday morning, and I was kind of sat there and I was like, okay, well, what do we want to do? What are we looking to do? Where are we in the market as a whole? So all I did is jump onto the hourly time frame, and I looked where we were. You can see we kind of had this descending wedge, or whatever you guys may call it, and we broke out of this level. Okay, you could have played buy stops along the way up here if you got the right setups and things like that, with the bias that we've had a nice reversal from any given zones down here. Okay. So now we've had that massive move up, we've had a small retracement, and now we're just having a small chop up. The normal eyes, right? The normal eyes for this would go kind of, we kind of have this move up, and then we're going to be looking to kind of find a pivot point and then break this level and so on and so forth, right? But for me, kind of that trajectory on the trade is like very, very steep. It's very strong. And as we've gone onto the smaller time frame, we can see the bullish moves are strong and consistent. Okay, they're consistent. That's one thing you need to look at. They're very consistent. They're very strong. We're not weak. It's just a very, very nice mover. Okay, and I liked that on EJ. In addition, I have a sentiment kind of indicator scanner that tells me that the market on EJ was looking good. On a higher time frame, we was looking very bullish. On a smaller time frame, we were looking very bullish. And you can kind of see that from the fact that we've had this massive uptrend. We're still developing higher lows. So this low is safe. This low has been safe. This low has been safe. This low has been safe. So it's not breaking down. Okay, there's no negative or a short bias in the market here. Okay, we're just slowly going up. So when I jump to the market, am I going to be the genius, the smart guy that's like playing the inverse of the whole trend? Am I going to be shorting this? Just sit with yourself now, and we do quizzes on the Discord. Sit with yourself now and ask, am I going to be shorting this? Am I going to be looking for shorts from this zone? The only way that you're going to be looking for shorts from this, and this is a very, very basic kind of idea, is if we start breaking down these levels and start kind of giving this formation. Okay? And it depends on the context. It depends on so many other things. And I don't think you should structure your trading from, oh, if this happens, then I'll do this. Because if that happens, then you'll look for this. Do you know what I'm saying? So in this regard, you kind of have this nice uptrend that's going on. And if we were going to look for a downtrend, we want to see these lows being broken. Okay, we want to start to see the market distributing. We want to see the market start coming down, reallocating funds, then bringing them back down, and that's them building positions and all that type of stuff. But we don't have that. Okay, we don't have that. So what should you be looking for? Wow, longs. Should be looking for longs. So like I said, if you can have a bias, right? You can have an idea of where the market's going to go, but now the difficult part is being able to pinpoint where it's going to go. Where are we going to go? Oh, maybe we've got this fair value gap in no man's land, and oh, we broke above this high. Because like what a lot of people are looking at now, and I'm not trying to shit on other people's strategies. That's not what I'm here to do. But if you have a look at this, we kind of have this A and D strategy where we have accumulation, manipulation, distribution. And if 90% of traders are going to be looking for this, then it's just building positions. Okay, so we kind of have this, let me think, accumulation, manipulation, distribution, look for a retest within this zone, and then we're going to be looking for a sell-off, right? Maybe you might go on to, let's have a look at a time frame. Yeah, maybe you might go on to this time frame and go, okay, we've got this kind of order block here, guys, and the market's tapping into this zone. So we're going to be looking for shorts from this zone because we've had a manipulation, we've had a chalk, we've had a market structure shift. Sorry, I've been with the wrong people recently, and it's just a bit of a meme. But so we kind of have that zone. And look, guys, oh my God, it's selling off. It's selling off. Let's get short. Everyone gets short. So a lot of people will go short from kind of like this pivot point, and then they'll have their SL just above the high because it's safe. Okay, and then they'll have their price target maybe back down to this demand zone. And that's not terrible. It's not terrible, and it's not wrong. I'm not going to say it's wrong. It's just a different way of looking at the market. So, like, are you really going to be shorting this whole thing? What you're trying to do is, if you were shorting this zone, what you're trying to do is catch the distribution phase, catch the markdown phase. Why are you catching a markdown phase at a high? Like, you're trying to catch a markdown when we're in an established uptrend to try be that guy. Okay, don't be that guy. Wait till the market has a markdown to tell you that they're looking for sells, or maybe they're not looking to run the market up anymore. And then when you get that confirmation, that is the only time you should be looking for shorts. Okay, don't be getting in a short and an uptrend. Come on, like, it's just simple shit. I spoke to my boys last night. There was like a few of them in the group, and we was talking about this exact like thing, and it's just common sense, really. I think it is the best way to put it. It's just common sense and understanding that the market will continue the way it wants to go until told otherwise, and that is it. Once you understand that, everything becomes a lot simple. So, okay, now we can go into my trade. So as you can see, we've had this markup. The market's retraced a little bit. This is an influence of like people getting into shorts and things like that. Or maybe it is a short interest in the market that's caused that downtrend. I don't know. That could be a possibility, right? Now, where did we get the entry? Let me just go into the Discord and I'll have a look where I got my entry. Just to make it like, you know, tied up with what we're looking at for the video. So EURJPY. Okay, so I actually got in a little bit early, and that's completely fine because we manage risk and things like that. I got in, if you guys look closely, I got in a buy stop, a break above that level. Okay, and the only reason is because we had this huge uptrend, the market had a markdown, we manipulated these lows, whatever it may happen, and then once we actually had this push up telling us it was like looking for a good strength, we kind of had this sideways price action, and once we actually broke above this level, I wanted to play the continuation to break this high. This is not my position, okay? This is just the position that I've seen a lot of other people potentially taking. So I placed a buy stop above this high, and then my SL was wide below this low. Wide, okay? I've got time, because if we do go into a distribution phase or we start to mark down, then of course I'm not wanting to be in that position. A lot of people will mark their SL below that low or this low. I don't really like to do that necessarily. I actually did mark it quite wide below this though. That's what I did. So let's set up the trade that we did yesterday. So it's kind of like a buy stop above those highs. My SL was wide below these lows, and then my price target. Let's go for the hourly time frame. As you can see, it absolutely ripped through. But my price target was at these kind of pivot points here, and the reason, just because I knew the market would react into that zone, and the market would like start scaling out positions or whatever may happen. So I knew the market would go a bit weird from there. So we did go into a slight bit of drawdown, which is completely fine. I'm not worried about that. As long as our lows are protected and we're not going to have a markdown, then it's completely fine. Okay. No trade is perfect, and I did also want to scale in on this fair value gap. No, I'm just playing. I'm just playing. We had this high that the market wanted to swing, and then what else high did we also have? We kind of had this zone as well that the market had a mark towards. Let me just go into the Discord and find the actual level. So we had a price target, 1.6. Yeah, that's basically it. 1.64740. Yeah, that's fine. So this was kind of our trade now. So it was around 23 pips. It looks like a terrible risk to reward, and it was. And the only reason it was is because I knew the trade was going to go in the direction, because it had the continuation, it had the confirmations and things like that. But it's just I wanted room, just in case we wanted to come back down into this zone and kind of sideways price action and all this type of stuff, and then do its move. So I just kind of like let it be. You know, I think it was a 1 to 2. So that's not a 1 to 2. I think it was around, because my price target was a bit higher. Let's actually get my proper price target. My price target was there. My SL was just below that level, just slightly. It's around a 1 to 2, which is not bad. I think I was risking like $700 to make $1,400 or something like that, which is not bad. Okay, that's not terrible. I would definitely look for better trades in the future, but this is just what we had with EJ, so I made do with what I had. It worked out, so I don't give a fuck. But we had this retracement down here. Market then had a markup from there. We kind of had this bounce higher lows and things like that, so it's looking good for us. And then this is where the price action kind of started kicking in and was strong for us. Okay, so there's first price target hit, SL breaking from there, and then we're going to look for that high to be swung, which it did. Okay, that's perfect. And it rallied on. Wow, it's going to rally on for the rest of the year, potentially. It's going to rally on for the rest of the century. Like, it's going to, like, I hate when people are like, oh, well, like, we cut too early. Like, no, we didn't necessarily. We were managing our risk, and we just took our profits from the market when we had them. You know, it could absolutely like rally on from here, but I'm not going to be holding that. Like, I'm not going to be going from 10 lots and trading like 0.05 lots just to hold the position. I scaled out 75% of my position here, and then I scaled out 25% of my position at the TP, okay, with my SL break even, so there's zero risk. That I think is perfect. I mean, I don't know if you guys agree or disagree, but that's just the way I trade. And as you can see, it hit price target. But let me go back into the idea of this. So if we just get rid of this, you guys know the trade I took. If we just go into this idea here, we have an SL there, and we have our an SL above that level, and then we have our kind of price target there. Do you see the price absolutely rallies? It just kind of breaks out of that that zone, and it just continues on up. It's amazing to see. But so many people are probably getting short here, and it's not the ICT SMC stuff is not wrong. I'm not saying that. I love the concepts. I do think they work, but you just need to have a better bias and a better mindset on the entire market and how the market's performing, looking at gold, looking at EU, looking at DXY, looking at all these different elements, even ES, even NQ, looking at all these different elements and adding it to your trading will help you like not catch the wrong side of the market or look on the 1 minute time frame. Like, yes, you could have took a scalp. This is what I'm saying. It depends on what you're doing. So you kind of have that manipulation, distribution, whatever it may be, and then we come back, tap this break or whatever it may be, and then the market does have a markdown, okay? But you need to be closing your positions very quickly, and you need to be scalping, okay, in regards to playing a downtrend on an uptrend, because I do as well. I trade this shit all the time, but trading this is so much better, in my opinion. It depends on what you want to trade. I'm not saying anyone's right or anyone's wrong. I might be wrong. You might think I'm wrong, but this is just what I'm comfortable with, and this is just the way I trade. So I'm just kind of giving you guys a different point of view on it. So that's the EJ trade done. If we have a look where it is this morning, we did have a markdown from there, and we actually swung the high. That's fine. I'm not sorry about that at all. But now we're kind of in this weird phase where the market's just chopping sideways and things like that. You can see once we had that low, we did kind of have a little bit of retracement, SL break even. And then when we actually did swing that high, it did swing it aggressively and then have a back test into that given zone and then continue on from there. I'm not holding it. Okay. Trades can go on for 1,000 pips plus. I'm not looking back and, getting upset about it. But anyway, now we can kind of touch into Elliott Wave. We're at 15 minutes now, which is great. So I'm going to just briefly talk about Elliott Wave and how I trade it. Okay. Usually the market, this also taps into accumulation distribution, but the market typically walks in legs. Okay. So typically we have a 5-wave Elliott, and this is basically an uptrend that the market presents to us, an impulsive move. So it kind of stems in along the lines of this. If I just make this black and then put a wave on. So it kind of stems along the lines of this, okay? And this also works fractal, okay? For the guys that may not know fractal, it basically means it works on different time frames. So maybe on this Elliott Wave 1, so we have 1 leg up, okay? And then we have a mark down, leg up, mark down, leg up, okay? And then in this phase, on a smaller time frame, we might have an Elliott Wave like so, okay? That will be... Oh, I'm on it. That's why. So it might be along the lines of this. Bang, like that. Okay. So we might have an Elliott Wave 5-wave being created here as we're kind of going, into phase 1 on a higher time frame. So on a smaller time frame, we might have this, but on a bigger time frame, it just looks like a leg up. Okay. And this works on the number 2, 3, 4, 5. Okay. So it works fractal. It's very, very interesting when we kind of can develop on it. So typically, we'll see this on a smaller time frame, and then from this level, what you want to see, typically, depends what time frame you're on, is kind of like an ABC retracement. And what this basically means is just a reset. Okay, it just might be a reaccumulation, and then once that reaccumulation has occurred, it will then go into this phase where it carries on from there. Okay, but so we can trade this, right? We can mark this out, and we can use Fibonacci's and all this type of stuff to develop on this. But what happens when the market starts trending down? Okay. So when the market actually does start trending down, what you want to see is breaks below these levels. Okay. So you want to see a break below this level. It's not a break of structure. It's not a change of character. It's a redistribution phase or a distribution phase. And what we want to kind of see is the market then look for a leg up, and then it start kind of failing down, where we kind of start going into this weird breaking down phase. Okay. And we want to be confirmed by this. And typically, usually on a smaller time frame, if we're going to be kind of looking at this stuff, you want to see like a 5-wave Elliott into an ABC. And then once we have an ABC, 5-wave, so on and so forth, you want to start seeing the ABC breaking down. Okay. So typically the retracement that it has will break a level, and then we'll come down. But that's not like confirmation of sells, everyone getting sells. What could happen is it might just be breaking down to reaccumulate. Okay, so it might just be coming back down to this level, and then what happens is it will blow through that level. Okay, so what we want to see is a confirmation that the market keeps breaking down, and then once that's happened, we can then confirm that the market's looking for a move up. Okay, so if we go onto a chart right now, and we have a look for an example, this could be an Elliott Wave on a higher time frame, just from what we was looking at. And again, it's not a case of 1, 2, 3, 4, 5, and then that's it. End of the trend. It will go into an ABC, and then it will go into another Elliott Wave. So let's have a look to see if we can see this on here. So I'll go 1, 2. I'll take the whole trend, 3, and then we was looking for 5 on there. Okay, so now it's a really interesting spot. That kind of works. It depends on the time frame you're looking at, but on a higher time frame, that would be valid. It would kind of be like 1, 2, 3, 4, 5. Okay, or you could potentially go 1. So you got leg up, leg down, leg up, leg down, leg up. And then this can be our kind of A, B, C strat. And then the market will then move into another 5-wave Elliott. Okay, so it kind of may look like that. Again, it's not always going to be pretty. It's not always going to be pretty, but this is the way the market moves in legs. And it's a very simple concept to kind of understand. I don't want you to be putting all these elements onto your chart because it's not necessary. You don't need to do it. All I need you to do is mark out the legs and where we are, where we are in the market. Okay. So you can see here, we kind of had this, 1, 2, we go 3, 4, 5. And then we actually did have an A, B, C, and you can see C. You can see, oh my god, I don't like that. You can see that C broke out and actually kind of created a new trend, and then this potentially on a higher time frame could be a 1, 2, 3, 4, 5, and that's potentially what we could be looking for. Okay, so you see what I'm kind of trying to explain. I'm not going too deep into it. I'm not trying to overwhelm you guys. But let's just talk about one more thing to help you guys. If we're looking at Elliott wave theory, you have to use the rule of accumulation, distribution, Wyckoff, or Fibonacci's. And Fibonacci's are a gray area just because it's more psychological. It's not really a massive input to the market. It's kind of, it's not really much. It's psychological. I do like Fibonacci's. I'm not trying to shit on them, but it's a bit of a gray area for traders. But anyway, so if we have a look at this, you can see the market's had a leg up. We look for typically equilibrium. Okay, typically you look for 0.5 or 0.62, typically psychological levels. But again, what you want to be doing on a smaller time frame, let's say we've got this and we've tapped into that zone. What you want to be doing on a smaller time frame is if we've had, let's have a look. You can see you want to see an uptrend, you want to see a downtrend, and then you want to see the market kind of, what am I trying to think? You want to see a mark up from this given zone. You want to see the market come back down into that zone, and then you want to see the market making legs back up. So you want to kind of see another Elliott wave form from that potentially. It doesn't have to be exactly like up, down, up, down, up, down. It could just be a level where we've ran up, we've had a small retracement, and then we've confirmed the breakup of that previous high that the market wants to continue on up. Okay, that's what you want to be looking for. And then, of course, a leg above the Elliott wave 1. So once we have that uptrend, we break above that level, then it's great. The rules are represented as if we have a leg up on 1, we want to see 2 have a higher low. We want to see 3 a break above a 1, and then 4 cannot break below the high of 1, so it can't come down to like this level. Okay, it's too deep. It's too deep for us. And sometimes, it's valid. It's fine. These rules can be bent. They're not like perfect. But those typically the rule of thumb that I use. You want to see higher lows being created. You want to see the market just giving us this bullish uptrend. Because if we're kind of like a bit slacking like this, it's valid, but it's not strong. Okay, and that's what we want to mainly be looking for. So I mean, to go on your charts, EU is actually breaking out quite nicely today. So even if we have a look at that now, we kind of have that. What do we have here? Just have a look. Yeah, so what we spoke about before, but now we're kind of 1, 2, 3, 4, and we could potentially be on Elliott wave 5. We broke above these highs. That's showing us bullish confirmation. If we grab a Fibonacci from this zone. Yeah, see, it's just bias. Like, I've just put on 4 different Fibonacci levels to try to find the level it's bouncing from and then give myself an excuse to say it's bullish. Don't be like that. Just we've had a bullish move, so now we know that level's there. Okay, that level's valid because we've had a break from that level. If we control that out, so we've had a break from 0.32. We've had a nice move up, and then we know now that the market's good from this level. Okay, so it's strong from that level. But we didn't. It could go, oh guys, we're tapping on 0.236. Let's go long, and then it's like it goes long, and then oh we're tapping at 0.38. Let's go long, and then oh it's tapping, and then and then it's like, come on. So you want to see confirmation breaks above a high. You want to see confirmation breaks from their levels. And now we're going to go swing for that high. I mean, literally in the Discord this morning, I put smaller time frame structure and EU is not terrible. We're likely going to swing the high of 1.8765, which is just this high up here, and we're not too far from it. But I have no current buy entries. So what do? We wait on the sidelines. Overall, EU is ugly, extremely ugly. So I don't want to jump in the wrong side of the market by overlooking poor technicals. Let's have a look at the daily. Let's clear my chart. I mean, it's kind of like in no man's land, high, low, high. So we just draw it out easily. Got a high here, low here, high there, low there that's been swung. Low there that's been swung, high there that's been swung. So, like, I don't know, the market's just in a weird, like, yeah, we're tapping from this zone, but we could come to this zone and then immediately sell off. There's no real structure within it, unless we have a look. Yeah, so we did kind of have like a reaccumulation phase here. Then now the market's breaking out, but it's just not enough overall trend wise for me. So that's kind of it, guys. I've rambled on a lot on this video, but I think these videos are nice just to break down the idea of the trading that I do and what I kind of am looking for at the moment. It's very interesting to kind of get into my mind. But I'm going to be posting a lot more videos like this. So if you like the longer form of content where we're just breaking down charts and talking about analysis, please feel free to drop me a comment, tell me you like it, drop a like on the video, and drop a subscribe if you're also still here. So I appreciate you guys for hopping in, and I'll see you in the next video.